Tim Evans from Longleaf Trading Group is live at the CME in Chicago. Warm welcome to you. It's intriguing, is it not? Because we've seen, notwithstanding strength in the greenback, still a push up for the crude complex. So, is this one got legs? Because if that dollar continues its march north, it's going to really test some of the fundamentals at play here. But we will get a snapshot, will we not, via some OPEC and some domestic output numbers, very, very soon this week.
Yeah, hey, nice to be with you today, Carson. Yeah, I mean, there's a number of factors, clearly at play. To your first point, the currency side of the equation, the dollar catching a rebound today, I mean, typically would have, a slightly bearish impact on the crude oil space. But, even while the dollar index, was able to get back in that 92 handle, we were up about 65 last time I looked at the screen. Crude oil was ultimately able to hang on to some positive gains. So, it was kind of counter to what you would, normally see from the relationship of those two. But, I think the impact, the delayed impact of Hurricane Harvey, obviously with Irma over the weekend, there's so many unknown variables in terms of, when, we'll be back to full, capacity with respect to U.S. refineries, and until we really have a better understanding in terms of the impact on demand that Irma had over the state of Florida. I mean, I've seen estimates that, vary very widely in terms of what that impact ultimately is going to look like. So, we balance it all out on a balance sheet. There's still a few variables that need to be figured out, I think, before crude can actually, find, any direction, whether that's up or down in a dynamic way.
Technically, though, support seems to be in that 47 a barrel zone. Is that a fair estimate?
Yeah, I mean, I think it is. I mean, if you kind of track, kind of your standard deviation, on your 20 to 30 day, price range, that comes right in the middle, or that's kind of the median point within that range. Your 50, 100-day moving averages are coming a little above that, closer to that $48 level. And the market has, it really seems to kind of oscillate around that number. And I suspect it ultimately will, until the market has the confidence to find that dynamic move one way or another. I mean, at Longleaf, based on the fundamentals we're looking at, we're looking more at the intermediate term fundamentals, kind of when we get on the other side of the impact of these hurricanes. Frankly, we think the intermediate term fundamentals, have turned a little bit more positive. So we're looking for an upside push over $50 relatively soon.
And yet gasoline futures falling. So there is a lingering concern that demand, to your point, is only going to be weakening off, not strengthening. How do you square that one?
Yeah, I mean, that's a very good point. And Natalie, who I normally speak with on your program, she and I have discussed this a number of times on this program, and that is that, U.S. shale ultimately, is what has been so problematic for the production cut agreement, with OPEC and the non-OPEC members. As they were cutting back production, U.S. shale kind of answered the call and really ramped up production far beyond what any analysts were expecting at the time. But what we were finding, though, if you look at Baker Hughes rig count data, which comes out on Fridays, every week, week over week over week, we were seeing more rigs added as U.S. shale was continuing to try to add production, to global supplies. But over the last 8 weeks, 5 of those 8 weeks, we've seen a reduction in the number of rigs. So what that tells us, is that, U.S. companies, really could have been looking at the market and really seeing kind of the lack of demand that's needed to add those additional rigs. So, we felt this was, a force that was in play well before these hurricanes, hit Texas and Florida.
Where does this leave OPEC? Set to now stage another meeting. It looks as if some of those, some of those nations that have been either exempt or otherwise from the full production agreements want things to roll over till March. Are they likely to find common agreement on this one?
Well, that's $1 million question. I ultimately don't know. I mean, I have a pretty good sense in terms of where the, what direction the push will be. Saudi Arabia, obviously kind of the driver of the whole deal, is continuing to put pressure on the other members of this coalition, if you will, to try to get this extended past the March deadline if need be. I mean, perception is oftentimes as important as reality in markets, and market perception needs to continue to be that Saudi Arabia and the other members of this agreement will do whatever is necessary to continue to try to bring down the global supplies of crude oil that have been such a burden on the market over the last, year especially. Saudi Arabia met with the oil minister of Kazakhstan and Venezuela, Julio Del Pino. He expressed, very explicit problems with Libya and Nigeria being given those exemptions, and that was addressed at that last meeting, but it seemed to be a more forceful address, by the Venezuelan oil minister. And my assumption is, based on Libya and Nigeria being able to increase their level of production, which was the whole reason they were given the exemption to begin with. Now that that's been accomplished, I'd imagine that will be addressed at their next meeting.
We might call that a coalition of the reluctant. Tim Evans, notwithstanding, thank you so much. Chief Market Strategist, their Longleaf Trading Group at the CME in Chicago. That takes